Hi, welcome in. Michael here. In this video, I want to get into some advice on being a business loan broker and getting what you're worth instead of losing out on something and much more. I'm also a pre-underwriter slash underwriter, and I do quite a bit of this stuff extensively. I'm very analytical, so I like looking at a lot of documents, handling all, if not most of the process from start to finish. And that'll tie up into getting the most that you can get as a broker and making this worth your energy and time and a little bit more. So I like reviewing documents. I know how to analyze it, evaluate it correctly, pre-screen here first, and then documents, and then throughout the process, connecting with the right lender and or lenders, getting that communication from underwriting directly there, and then communicating back with them, doing a few things back and forth. That's where I get a lot of joy from, but a lot of it also comes from the documents, bank statements, tax returns, P&L, balance sheet, debt schedules, and a lot more. So I'm more than you can say just a business loan broker, and I'm an expert at that. I've been that for some time, as well as a funding expert in many different services, not just the revenue-based loans slash advanced lump sums, but lines of credit, credit cards on the creative credit-based financing, personal loans, personal term slash installment loans, I should say, personal lines of credit, collateral backed, SBA, online bank term loans, and many more, equipment loans. There's many more solutions. On the real estate side as well, I do plenty of that with a lot of real estate investors. So heavy on a lot of that. I help businesses improve their cash flow, their profits, their EBITDA, how to better manage their business. And so I do many multiple things, and I do it very punctually and disciplined. And I have a calendar or a suite of things that I'm very disciplined on, making sure that I meet those goals and much more. So some advice, and I have an Excel spreadsheet. I just put a few of my clients here from the past and how things evolve. So if you're just getting started, you may not understand how to navigate. You try to go to a direct lender and you don't have enough volume generated through them or through someone else for them to bring you on board, and you have to meet a certain amount per quarter, per year, yourself only, and or with a team. And there's a variety of things you try to do, but they won't allow you to. Maybe it's time in business. A lot of the time certain ones go off just of, you have 11 plus months time in this, 12 plus months, etc. The list goes on and on. Every single one of them is a little bit different in what you're generating and what you could generate. So the best thing that I would always advise is to go through a partnership. If you don't get those direct lenders, you can go indirect through brokerages where they house those lenders. Think about it like as an insurance company where you have the head of the house at the top who doesn't need to promote the products and services, yet has a team of agents that run their own agency or agencies where they promote the products and services. Now the person up top, whether they just collect or not, they're giving them aid, allowing them to do that and more. They can be there to help, but they operate from a standpoint of once those agencies earn, they earn, and they may earn a majority share or majority earnings from that or less on every deal, but it accumulates quickly because they have a lot of agencies underneath. So the house will always win. The lender will always win in this. Keep those two things in mind. But how you need to begin, if you can't get those direct lender partnerships, which at times you still can get, it just depends on who you go to and the tier of lenders and the space and different products and services. I was able to do that, but some of them wouldn't allow me, and I've been doing this for many years, and now I have the best direct partnerships with those lenders of different tiers, different services, advanced products, lines of credit. You have the business term loans in terms of online banks, SBA loans, real estate investing, equipment loan lenders. The list goes on and on. Those are just some of the many again. So if you have to form a partnership with a brokerage or what they would call also a super broker, and this could be a place where they house these lenders and you're given access to indirectly work with them. If you don't have a direct lender partnership, it would be more so indirect, sometimes direct, but it's just the way how it's shaped. You can kind of call it like a hybrid in some cases, but normally what happens is you will bring in your client. Now, the question of this is how much do you handle along the way. And so as a broker, as somebody who is more quote unquote hands-on looking at documents, if I didn't say, I said I'm analytical, but I'm also very introverted. I'm a Libra in this space, and if that says anything, I'm very well balanced, you could say. The very loyal type, you don't have to worry about that with me. Cerebral, intellectual type, ambiverted with extroverted qualities. And so I don't ever pressure anybody, and people, they gravitate to me from a client perspective because I'm very loyal, transparent, humble, grateful for what I do. They know me as a person to an extent, at least, and then wanting to build that with me, that strategic partnership and roadmap underneath their business and multiple entities, if so, or they're going to prepare to build that over time. And I really have built my own personal and business brand, and that's what you should be doing. That's a topic for another time. I'll try to leave more material to this down below in the description. So I talk less, I listen more, but you see me here, I want to get this message across. And when I'm not here, by the way, my skill set is not like primarily phone calls, and I'm not a great talker at all, or I wouldn't even say a good talker. I'm Hispanic, Salvadorian, Mexican American, grew up in Orange County, California, so I'm more whitewash, yes, but I can't say, and I went to school, so I educated myself, I studied hard, I played a little bit of Division I soccer, and then I had studied sociology at the time, then migrated into chemical engineering. I have a mathematical system mind, and did that for some time, and then I made a transition, a quick jump. It was hard to do though, because I wanted to start a business, so I got back into the business side, and I had already satisfied those requirements, so I continued further there. I've worked in construction, manufacturing. I actually worked in the field positions, the machining part, to then the blueprint room, and I've had quite a few experiences, warehousing, and a few other roles. I was even a rampage at some point, and then I got into financial logistics later on, working even harder up here. Still had to lift a few boxes of media for the huge contracting company servicing HP and P South. It went down under, not my fault. 50 plus people relieved. I had to go back on unemployment benefits and food stamp cards, and it was not a good feeling. And at that time, I was luckily in that last position, preparing for passive income and starting a digital business. So I have one in the digital marketing agency, lead generation space, health affiliate marketing, other affiliate marketing verticals, other ventures. And this has been my primary focus for some time as an expert in the business loan, advance, credit-based, personal business credits, collateral-backed funding, equity, liquidity, and many more things involved. And I just built that over time, and not focusing on too many things at once, but over time. And so what you should do, if you can't get any partnerships, and if you do, get some of them, but that doesn't mean that you're going to get quality clients, or you're going to get quality clients, but they don't serve those lenders. So when you can't get access to specific lenders, then you're going to be in a position where now you got to go find a lender, or vice versa. If it was a lower tier and you couldn't get access to a lower tier, or you did have one, but would you have the best relationship, or would you have the best one out of those 3 or 4 in that industry? So it becomes a thin margin in that. And so you don't want to leave that up to chance where at the last second you're looking for a provider. So you can team up, partner with these super brokers, for example, and work that way, work your way into your independent ISO relationships, and then onboard later on with other direct or more direct lenders, I should say, and you'll have that experience built. And that's what I did in most of my beginning, although I had some other partnerships already. I felt like it was best, and regardless, sometimes it's best to take them to a brokerage or a super broker, and they can help figure out which lender is best associated. There's a time and a place for that, and other times as you get better at this, you'll figure out like, okay, you don't have to go there, and you can go directly to this person, and they're going to get you an X amount of broker points, or what you put into that and all that part of it. And here's the next point of that. So with some of these, you won't get paid if you're doing it all. Like, let's say you have the licensing, or not the licensing, I should say, but in a consulting manner. At that point, maybe it's a different thing where you're doing things within a specific state. But now you are the person who handles the documents, who speaks with the lenders, the underwriters. You do those parts first. If you're handling that, you're handling it from the beginning, helping the client get in, whether you called them or they called you, or you were doing it through email and or text message. I don't always get on phone calls with everybody. Introverts, us, we don't want to do that. That's not my primary skill too. My primary skills are documents. So I fit the more underwriter mold better than anything. But at times I understand you do have to do this. Now, it depends on what point in the process you are at doing that. Not always do you have to, though. I've funded a lot of clients, $1 million clients, kid you not, without ever even having a phone call with, but have a good personal and business relationship with them at the end of the day. And they also prefer to do things through email or not. It's convenient for them and it's fine. They want to move along the process. They trust me that much. Boom. And most people do, because I built that reputation and that loyalty with people, and they come to me a lot because it sits with them very well. But if you are in that model, and there's models out there where it's like network marketing related, I'm not going to call it a pyramid scheme or a Ponzi scheme. That's not what they are. But there are these models that are more like network marketing focused, where you could be a part of an entity, or there's two entities. One's the marketing arm, and the other one is the brokerage or the direct lenders, etc., or the brokerage who houses those lenders. But you have to go through the network marketing, although it's not 100% as many would claim it to be, or MLM type related, but they house and hold these agencies. So in a way, it could be network marketing funding related, and there's probably other products too that work differently. I get that. But what you have to be careful about is when you're doing so much of the work, that's the thing, is if you're more hands-on and you would prefer to be like I am, and you work with one of these organizations, they may have a team association where you'll be brought in and you can refer other agents for a percentage you'll earn of their volume, funded volume, or all this other stuff that goes about it. And you move up percentages, or you do this and that. So you could build a team. But the problem with that is, in this market and in this industry, and whatever market it is, in the advances, like think about, some products are going to be more higher or medium to higher rates, and these products are so volatile and can be toxic to the owners and their business, and disrupt their operational cash flow and everything else. And at times it helps for opportunity growth if they're fueling it for a specific revenue stream or another one and trying to do more, and their ROI, their margins, everything makes sense, then okay, that's what this money should be used for. But when you're promoting those products and you have a team of agents underneath you, you don't want to rely on them. You don't want to rely on others making you money, period, in this space. It doesn't matter if they try to market you very well and they tell you, well, hey, if you build a team, then you can have people underneath. Yeah, it could be helpful, of course, if you build enough and the right people. It only takes a couple of people to really elevate this. When you don't make anything one week, somebody else does, or this happens, you can make a little bit of this and it can make up for it. But at the end of the day, if you're a true business loan broker and not just a glorified referral affiliate partner who earns a lot less and is eating up into your profits, you would branch out of that. And so with these types of services, it's like you're not getting paid entirely. When you get a personal client, let's say, where you could have got, like, I don't even have to use a calculator for this, but I'll just bring it up just to have. If you went through one of these organizations and you weren't going directly to the lender, or you weren't directly working with a specific brokerage that can help you broker and or act as the affiliate, depending on the process that's handled, the application that you send out, collection and documents, the back and forth communication, the lenders, the underwriters, all this other stuff, then it becomes a lot less. But if you do a huge chunk of that, it becomes more. And you can factor in a few more things. But let's say you were going to get at a 6% off of 25,000 a deal. You funded a client. Let's say somebody took 25,000, and these products can tend to be more higher paid commissions. Other ones are lower, like SBA loans, and some of the other ones 2%, 1.5, 1%, 2.5 real estate, 2%, depending on what you originate or what processing fee and all this other stuff that's included, and if you're eating up into your own commissions. At the end of the day, regardless of what you're making, I know it's a business at the end of the day, and you have to put food on your table and your family or whatever else is involved, the circumstances, but don't ever be naive. Don't ever be arrogant, ignorant. Don't just do this for the money. That's not what I'm in it for. I'm in it for impact. I get there's a business side and it has to make sense, the numbers there, but I focus on value and putting that out in front of people and getting them the education that they wouldn't have seen otherwise, and things that they can't find publicly and what others are not sharing with them and are transparent and or just don't know their stuff. So I approach it from a value point of view. That way you're not having to persuade or be deceptive. You're more confirming only what they would want and matching the problem or major problems to that actual solution, which is the product at that point, or it could be a different thing in between that. So with all of this, let's say At 25,000, here, I already have the numbers in my head, but here, let me just use this because I'm going to move other numbers around. So at 6%, let's say you were able to broker, and the industry can fluctuate up and down depending on processing of that client and what needs to get done. It can go higher, more or less, under. Um, but here, let's see. Oh, sorry. At 6% of 25,000, you would say that, convert that 6% into its decimal, and that would be here $1,500 that would normally be paid out to you. And you ask, does that 1,500 factor into the lender fees and all this other stuff? And no, that part would be paid out to you. That'd be brokered out to you. There's your origination fee and other things, and the broker fee, and some of that stuff can be packaged into that or side. But there are a few things that you have to pay close attention to. Usually it's meshed in a lot of the times, especially when you're working with a lot of the brokerages and a lot of these other institutions that are not as direct. And even when it's direct, that can happen. But here, 1,500. So let's say, and I have this on an Excel spreadsheet here just because I keep track of a lot of this. And this is an example some time ago. But here, I tracked this back some time ago and wanted to bring this up as an example. Let's say you were working for one of these MLM network marketing, build an agency underneath you. And I'm not bashing that, but you don't want to rely on a team to make you money in the advanced space, at least, or in any, to be honest with you. Do you want to roll over every single month just depending on somebody when these products are already hard to help somebody get funding with? No. So what do you need to do? You need to align your mission, your vision, your values together, your vision, your values first, and then line up your mission. Have the right morals, have the right characteristics to do this right. And I know it's probably asking a lot of you, but as you grow, and you're going to grow in your personal development, don't get that sidetrack. Work on yourself too. That's going to help you out a lot. And so here I have one, and like I said, some time in the distance ago, let's say, for example, you have one client funded here, and you have a funding amount of 22,000. What some of these companies will do is not base the commission you get off the funded amount or total value and these other things. They're going to base it off of what's called bonus revenue, or BR for short, BR percentage. And so you'll get listed and it'll say funded amount, and then it'll also give you the bonus revenue. There will be a specific number there, and that bonus revenue percentage can depend on the client, how it gets processed, and the tier, and a lot of other factors that are involved with this. So sometimes it's 10%, sometimes it could be like 6.3, 8%, more or less. But that bonus revenue is what you're getting. So for this example that I illustrated, I put here, let's say a bonus revenue off that 22,000 of a client you got funded, you got 1,386. Now that's not a whole lot. So you got to think about where's the rest of that. And you ask, well, what percentage of it goes back to the business that's helping you and giving you this kind of compensation plan and housing this other stuff or whatever else is going on, helping you, allow you to build a team. And there's a lot of other things that go on with those numbers. But bonus revenue on $1,386, and the BR percentage of that is around 6.3%. And there was another one with 15,000, and that one bonus revenue was 1,500, and you get a bonus revenue percentage of 10% from that. So the total commissions to you as the agent, and keep in mind, if you did it this way, and I have all of these partnerships like this I can go directly when it makes sense to go directly and to funnel it that way. There's certain ones where I'd rather funnel it through here, a new provider that they only want to take on board with them, that they only want to be partnered with them, and it only works like this. And so there's too many things going involved. It can be confusing. Until you get into this, you'll realize it and figure it out. But on that 6.3% of that bonus revenue, I'm getting $554.40. Let's just say that. And then the actual amount, if it were at least directly, let's think about this now. If you got 6 points, broker points, or you got a 6% commission percentage, or 7, 8% as you move up to, and that can allow you to do that to specific lenders, or they start you off at a good position and you can only move up from there. And so here, let's say now the actual amount that you would have been given if you were to get the full amount of that funded value and not a bonus revenue that they're adding, because it's an agent building partnership, build residual, and there's other components to it involved that have to be dispersed, allocated in the money wise part of it. So here you would have earned $1,320. See how significant of a difference it is between $1,320 to $554.40. Heck, you can even just move away the cents, the ones and the tens there, but that's a significant difference. So you're here trying to figure that out, what the total difference is, which I've already done that, and I have a lot more columns for what I need to do. But here you have this column, I labeled it G through H, or I've added a few things too, not just that. But here, that's a difference of $765.60. So what could that $765.60 extra do on top of what you received? That could do a lot more, right? And so very quickly, I want to do this. I'm going to draw something up. Give me 1 second. Okay. I had another number I needed to add there. But here, and for another example, but here, that's a big chunk. So you're depending on that bonus revenue to be as high, but at the same time, you want to base it off of the funding value, or you want to base it off of directly that, or if another number. Sometimes that moves ups and downs you get with a lot of that, just processing a lot of this with clients. But hey, that's money eating into your profits if you didn't go directly. I know there's a time and a place for that, but as you get better at this, the answer people would tell you is just get more clients so you can make up. No, that is not the response to this. In a market where it's already bad, or if it's good, these products are kind of hard to get people to say yes to. You don't want to ever push or be that person. Again, confirm, and if you did it correctly, when they get to that point, they'll answer it for themselves. And so that's what you're eating up into. And there's other ones too. We haven't even talked about larger and lower amounts and getting as many as you can get. And if you added all those columns together and you base it off every single month, every single quarter, every single year, now you're probably at a loss of $200,000 that you could have had. And then operating cash flow, you could have moved those profits somewhere else. If you had somebody else you needed to pay, a business owner you brought in to help you. There's so many things that you do. You reserve that, of course, into another account. But that's just one example. And then another one here, a $15,000 funded amount and a bonus revenue. This time you get $1,500. And I know you're like, off that $2,200, I got only $1,386. But off $15,000, I only got $1,500. So it just depends on what gets processed and what goes through, and it can be up and down. So that one, instead of 6.3%, it's at 10%. And so the total commissions underneath that is $600. See how the BR has an effect to that? And the bonus revenue, I should say. So total commissions was about 50 or so less than, more than the previous client that we funded at $22,000. So here, very quickly, I have a few other numbers that I wanted to add. Okay. So to address that, you see the picture here without me just insinuating, without me even telling you, like you're losing out. But what is the opportunity cost? What's your cost of the transaction? What is your cost of not doing that business? And where are you currently? And then where will you then branch out if you had to? So if you had to start like this, like I did back in the day, and then move that to getting those actual direct lenders that you can help, that can help you, and it be worthy of your energy and time throughout the process, and then getting the percentage that you should be getting, I would advise quickly to do that as fast as you can. But if you value that relationship up with the other institution, let's say it's not the MLM network marketing company that's probably the arm to the brokerage, but if you can have that partnership with that brokerage and you've been so loyal to them, it's a little bit harder to say you won't send them any more clients. But because like I have those and I've established those where I still send clients through them, or I would go directly, because I have that leverage and I've had that relationship and I'm very loyal, and it's more than a number to me. It's not about getting always the maximum amount of commission. That's not what you look at. There's more to it. But when you get to a point where it's like it's become too much, you lost clients, now you're trying to make up for the ones you lost, you're trying to rebound, and it's just like eating you up inside. And now you got somebody funded where you lost out on an additional $500. Every single dollar is going to be needed. I get that completely. And especially if you don't have other ventures or other projects, like I have others, but it's, again, I'm looking at it as a, is it energy and time efficient? It's not all about getting the highest amount, but when it needs to be, it needs to be, and it needs to make sense. No matter if I really needed that extra amount, it's not the point. The point is, let's not eat up into my profit margins. If this were my only business, if this is the only thing I ever focused on, then I would be still the same way. But hey, look at it from that point. And you left the job, this is your only thing you're relying on, you brought some clients in, great, but I lost in total with those three, I lost over $2,000, $3,000, $4,000 plus dollars that I could have had. And had you have gone somewhere else or taken that to a different brokerage that would have paid you more, or a direct lender that would have been able to help you with that. So you think about that total difference, it's a big amount. So actual amount, at least directly 900, I know 300 to 900 to 600 is not like it's a night and day situation, but when it comes to paying those bills and that's how you allocate your money, and you don't get that, then that makes it difficult. Let me add one thing here. Okay, that's right there. So when you take a look at the total loss, excuse me, you look at 1,065.60 of what could have happened to gain if you went directly $2,220. So you take a difference of those two, 1,000 or so, more or less than that, then you see the significant loss that you had. And as you do this more often, you're gonna eat up into your profit. So at the end of the day, you got to do what's in your best interest. If you, do this part-time, and you're okay with that, you're going to bring in clients every now and then. You won't be consistent at this. I'm consistent at it. So I look at what I'm bringing in versus what I'm not. And I bring in quite a bit. And I have those personal and business relationships, very concrete. And so I have to do what's in, a lot of the times, the client's best interest. But at the same time, when it comes to, like, I look at the numbers, they have to make sense, of course, but I'm not going to do always what's in my best interest. It's normally it's in the best interest of the client. And I mean that like very, very 100% truthfully. At the end of the day, it's what's in their best interest. It's not like my numbers are not what they're coming out to be, so I got to send them here. No, I'm not going to do that. I've never done that before in the past. It doesn't cross my mind. I want to do what's in the best interest for them. So if it's this way, it's that way. If it's this way, it's that way. And so, yes, can there be room for improvement on that? And I think there can be, but will they do it? That's another question. Will you become more hands-on and they let you do that? That probably won't happen. Some of them will let you be, others wouldn't, and it's something, again, you have to understand. And I could put more numbers here. I can go through them and share them with you, but that's just a little bit of what I wanted to share with you. And so there are more numbers. I didn't give you the full picture. Of course, there are many more things you have to factor in to profits, cash flow, doing this analysis and making sure you're generating enough revenue, profit margins. I can go into a lot of that. But at the end of the day, bottom line, your profits and eating up into your profits, eating up into that operational cash flow. And if you get clients funded at a higher amount and you get a little bit and you're like, okay, well, it was worth it. I wouldn't have been able to fund them if I hadn't gone this way. Or if I had gone this way, they wouldn't have looked at it this way. Or I have a strong partnership and relationship, so it's better to go that way. So you always constantly will think about that in this industry. But don't be, I'm not naive. I'm an observer than a talker. So I see past through people's BS. I say that nicely. Again, I don't want to be that person, but when I have to say something, I will say it. Normally I keep to myself. I just go about my business, looking at documents, looking at a lot of things. But when enough becomes enough, you might get to that point and stand up for it and say, I can't continue to do this way, because you know as well as I do that I'm losing on ones that I should have got an additional 500 plus, and those additional 500 plus would have made a significant difference. And when you don't get that, you become reliable on stacking a lot of volume of clients to just make up for those. You have to get the next client at a certain amount just to make up for what you didn't get in the first one or the second or the third one. And you don't want to play that game. The game you want to play is trying to get repeat clients, not always trying to seek new ones. The repeat ones are going to help you, but not always depending on the service while they come back to you. So that's all I wanted to go through in this video. Hope you got a great amount of value from it. There's a lot more to go in detail, strategies on what to do, who to team up with, and if it's the right time, it's the right partnership or partnerships. I'll leave more information down below in the description. Be careful of all the noise out there in the market. I'm not a video guy. I'm a writer first and foremost. I like blogging. I like to do blog reviews, informational content, writing, journaling, the video content. I've been doing it for some time, so I've learned that. It's not my most comfortable, but hopefully you got this and it's of value to you. Again, be careful of who you hear from out there, and really trust nobody in this space. You can trust me or not, but I won't be that person pressuring you, or I'm not disloyal. You don't have to worry. I won't take advantage of you. If you need me to help out one of your clients, I'll be very reasonable in what you earn from that. If you decide to do it that way too. But again, I'm very reasonable. I'm one of these very, very few in this space where the broker side, at least that side, the underwriting more, but the broker side doesn't necessarily match my personality. But I saw an opportunity to, not the money, but to help out more people. And I had been through this journey funding my businesses. And so I really wanted to help people get away from all the mistakes, all the stuff that I've seen, and show them how to actually build that up correctly. And it works well. It's just, you have to work it and understand how to use systems, processes, automation when it needs to be, not at all times. And then you'll figure out the flow from that. Later on, if you decide to outsource and bring more people in to help you at parts of the process, so that way you're more of the back end guy or girl, then that would be helpful too. It just also depends on your character and your personality. I like to be the back end partner of a lot of this, although I do front end stuff, but the back end stuff, reviewing, doing a lot of that. And just imagine, a lot of these clients are going to give you headaches. I'll be very honest with you. When you feel like you have something, don't emotionally be tied into even the logic part of it, because there's a lot of stuff to uncover with clients. You wouldn't imagine. Just recently, a lot of clients with changing banks for certain reasons they wouldn't tell you, certain things that they have bankruptcies for, defaults, or close to getting into a default, what else they would consider a default. They have a lot of other issues, background checks. The list goes on and on. You feel like you would have something and you feel like you're spinning your wheels. You got to a point, you wanted to address that first, so then when you get to a later point, you don't discover that and it's been 15 minutes in and you're like, yeah, I'll send you this. No. So making sure you build a rapport personally and in business enough of, and whatever medium, whatever channels, that's helpful too. But knowing not to over leverage yourself, be patient, be calm, and allow for feedback, be open-minded. I know it can be frustrating at times, I get that, but it's what you do when you're not in your business that translates into it. How calm you are, how's your health, how's your relationships, and all of that will build, and it would help you subside a lot of the tasks or day-to-day activities that you're doing in this business. And if that business is also correlated, or it's a fraction of what you put into the other businesses, that's another topic that you have to think about. So that is all for now. Think about directly, indirectly, when you have to do one versus the other, when it's better, even if you have direct lenders, to go the other route, and making sure that your energy and time is worth it. Otherwise, you're asking yourself, well, I could have done that, I could have done that, and I could have earned more from that. And instead of having to get 2 clients now, where you have to get close to 1,500, all you needed was that one client. And in fact, that one client probably got you $2,500, $3,500 paid, as opposed to if you went the other route, you would have only made $1,000 total with 2 clients, or maybe just 1 depending on the funded amount. So those are numbers that'll play around your head a little bit. And don't be a fool. Don't be jumping on the train everybody else is jumping on. Usually when that happens, you should look the other way, or question it, or say, hey, that's worthy, I'll have it in my back pocket, or it's at a front pocket now and I have to pull from there. But don't be fooled by the information that you get in this space. Trust nobody, do your best. A very selective few you can trust. You can trust me, you can depend with me, that's not a problem. But I have a lot of things to do too as well, and when I can get around, I can help. But I have my hands full in not only this business but other ones as well. It's not that I don't want to help. It's just I've become so much more busy or productive nowadays that it's just I can't be 1 hour here, 1 hour there. You can't just divert your focus that way. You have to be sequential. You have to understand exactly where you're moving from 1 second, millisecond to the next, and keep your mind calm at all times. That is everything for now. Oh, and in these other programs, just again, where they build up the bonus revenue, all that, they can go from 40, 60, 70, 80, 90, wherever they go, 30% if you get a client funded. So that gives you more incentive to move up levels. But then if that gets wiped out, then guess what? You're not earning that percentage. You probably drop back to the base. And you don't want to be doing that consistently. And in a market with certain products where that happens, it's so volatile. It's not as predictable every month. You may have like, oh, I got it, I'm gonna get $10,000 this month. It becomes nothing, or it becomes only $100, and that's what happens in some products, like the advanced products, more than anything. And other ones like SBA loans, that the approvals are like even less than 10%, less than 5% in a market like this. It becomes hard for them to get SBA loans, and even when they're ready, they don't submit the documents. They take forever. 6 months later, than they appear. You didn't do anything to deserve that. You're not that person to deserve that, and they did that to you. And it's like you're dealing with a lot of characters that are characteristically flawed, incompetent people who don't get things, who have never worked on themselves, just their businesses. So if you can work on yourself, you really will understand why that's important and why they don't have it and why it would be useful for them. And so their attitude, their effort, their morals, their values, their beliefs align. They're not ignorant, stubborn, cocky, egotistical driven. And if they are, they leave that out the door so they don't cause problems to you and your team. The friction, the resistance, you're not butting heads. I never do, but the resistance and friction sometimes is there, but it completely gets resolved and eliminated in a lot of times whenever I'm working with someone. So that's all of it from me. Down below in the description will be more information. If you haven't subscribed, please go ahead and do so, and click that bell notification icon if you so you do not miss any future content. Also, if you did enjoy this video, like I said, give it a thumbs up, share with others who you feel will get value out of it too. And that is all for now. Take care. Bye.